Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So this was day 2 of the snapback, which looks like more than a snapback, right? Everyone started talking about dead cat bounces yesterday, and now everyone's like, "Oh my goodness, I can't believe how much we've rallied." And that's what this market does to you. They take things down further than you think they should go, and then they take things up further. My morning note starting yesterday, I talked about 2 areas that could happen. One, if we get a nice little bounce back, burn off some in the old oversold condition, and then if they want to push the envelope. So not only yesterday did they give you that calculated bounce and some follow through today, they pushed the envelope even further than guys like me who was trying to play a bounce, thought could happen so quickly. And that's, I think, where frustration comes, because instead of like an escalator, it's a bungee cord. So it doesn't give you time. And when finally you get time to buy something, you probably don't want it. So anyway, you look at the chart of the S&P, you'll see that yesterday, we outlined, or coming into this week, we outlined this spot that looked like it could be really good support, and it got, pretty darn close. So if you didn't buy it, because it didn't get there or it didn't get here, which it could have happened, okay, you had the gap up yesterday to buy. And a lot of us did. It made sense, right? From 2120 all the way down to 1990, 130 handles makes some sense for an oversold bounce. We could buy it here, maybe get a move back towards support that could have been resistance. Okay, so into there, you're like, okay, if we get a gap up, let's just sell it and run. So that's what a lot of us did. I think I came along today, Spiders, Apple, Facebook. And, then we talked about, can it, see this spot, because if the sellers want to contain control, right, probably shouldn't get through this old support area, that turns into the real resistance, and that was, closer to 2060. Actually, you could have even made the area like this. So now it pushed above it. So anyone trying to be short somewhere around here, like me, because I was trying to be short today, a little bit right around here, I actually, got squeezed and I didn't hold it overnight, because, if the market was going to be that weak, okay, according to retracement rules, when you have a move down like this, chances are you bounce back a third for continuation to the downside, or maybe half. You start going more than half, it starts to negate the power of this move, and now all of a sudden we're just back in this range, and really, who knows what's next. Okay, the FTSE actually took back all of what it was down post Brexit, and if we were down because of Brexit itself, shorts getting a little scared because we were all the way up here. And granted, we were up in anticipation of a stay, but anyway, there's no real, there's nothing really to look at here as far as the chart's concerned now, because we have points of reference here now. You have a little bit higher. You have this 2076 maybe. The only thing a lot of people are saying is we have window dressing, so maybe tomorrow after they mark them, they come in a little bit, but traders just don't like when it's one way down and they close in the dead lows to one way up, and I think people will be a little upset if tomorrow we open down 10, 15 handles, considering people were trying to fade this move today, but whatever. In my note I talked about, could the Russell play some catch up, could the Qs play some catch up, and I think computers that trade my note do better sometimes than people. Because we're pretty risk averse, and we take the money when it's there, and if one level gets passed, they look for the next. And you typically, traders that trade manually get a little wishy-washy. Like anyone that started shorting a little earlier today, they got really beat up. But anyone who waited, closer to 206 in the Spiders, or 206.40, or even closer to, the gap from what's it called, from the post-Brexit resistance, you didn't really get too hurt. So like even for me with the Spiders, I waited. I thought it was a decent idea to wait. I waited till here. I waited till this spot, which was closer to 205.60, and then I added a little bit. Then I'm like, oh, we're coming close to this gap. I'm just not going to blindly stay in here and be in harm's way of whatever the market wants to do. But didn't short the open, didn't wait. I waited until a bit of a spot, and just didn't work. Whatever, it didn't work. But now here, there's a little bit more resistance. Maybe tomorrow you get something like this. Who knows if it opens up or not. You get a little bit of a topping tail. and then a high, lower high, another one, and then we rest a little bit and then let some charts build and continue. Like I said before, the Qs, what a quinky dink. Go read my note. If you don't subscribe to it, you should. I do it every single morning. Here is where we said the next resistance would be. Got above this yesterday. If you bought it and said, I'm going to wait until it gets to the next spot, maybe you sold here today, and now you have a gap to trade against if it wants to continue. Here's your next spot. IWM also played some catch up. Yesterday everyone was all talking bearishly because the Russell never made a higher high from Monday, and what did it do? Create a little bit of an island bottom by opening up, and it hasn't looked back. And here it is also right into that resistance from the note, which is what was that? Yeah, wow, look at that. Right as actually 112.80, and now we'll see what happens here into the gap. Taking back too much to keep everyone so bearish, but it came so far up that it's hard to just position there, which makes both sides of the tape scratch their head. Nobody wants to chase this market, after the move, especially if they didn't buy on Monday or buy the Tuesday gap up. But if you tried shorting it, basically it didn't work, and now you're saying, oh wow, maybe it was an overthrow move and we just, elevate it back up, and why be in the way? So when there's an unknown like overnight coming up, why stick to anything with too much size? So let's go to stocks. Amazon went to that, look at that, what a quinky dink. Went also to the 717, right into resistance, okay, but look where it came from. So we'll see how it holds in the next day or so. But held the 50-day, gave you a nice day yesterday, gapped up into resistance, not a decent decent place just to sell some and then sit. Talked about the post takeover news gap. You had two types of trade here in Tesla, even though it's been broken below the moving averages. You had your red dog reversal when it took back 189.73 and engulfed it. Then you had an inside day, and then it cleared the pivot from the gap when it announced it took over Solar City. And now, it's back into prior support, which is right here. That looks like resistance, and that long trade, calculated wise, is over. It doesn't mean it can't go up a little bit more. Maybe tomorrow, if it opens up, you get a little bit of a fade. Google, 700-ish was the spot to get back to, and at least this was calculated. At least you had your bottom tail another day, and if you sold into prior support that turned into resistance, it made some sense. You didn't feel like you sold it early, and some people might have even shorted it there, but you'll see what's next tomorrow. We talked about the relative strength in USO. USO, what a strong move. It didn't really, during that whole Brexit scenario, it didn't fall apart. Oil held above 46. This held the June lows and didn't get back to, to the May lows. A lot of sectors went all the way to below the May lows. Okay, this held above, so that showed relative strength. And then you look at the XLE, which we also said was above the 200-day before anything else. That had a nice move, but didn't really make it comfortable for you. It came in, closed near the lows, and it gapped up above the 200-day, and so you had to just buy it, and then today gapped up again. So we'll see how it handles this spot coming maybe tomorrow. But oil itself, the XLE is now back above the 200-day, and if you remember, okay, it was below it for quite some time. Okay, you remember when the XLE broke here, it gave you that head and shoulders top pattern, boom. Okay, and then it stayed below the 821-day, got below the 200-day. It's been below the 200-day for 2 years. Well, now it's hovering near it, much better. So it shows you that oil stocks are acting a bit better, so it's something that should be more of a focus for you. Gold, give you a move intraday, and wound up giving you a tail. So it gave short something to think about all day, and then all of a sudden, boom, just changed. So I don't know, overnight is when all these moves happen. I just would be flatted, to be honest, but you can do what you want. You have a little topping tail, doesn't mean it's game over. It's still flagging here. These misdirection moves happen a lot in the GLDs, but sellers did take over during the end, towards the end of the day, and it's still extended. So I'd be light either way. Same thing with Nugget. Just kind of just crazy the way this tape trades. It doesn't let you trade a clean breakout. Even here, remember when on this day it looked like the Nugget was going to break out, and it should have and didn't. Started to come into the lows, and that's when you had to, get in there and just guess for the gap up. And then on the gap up, it was sold. Then it wound up holding, finally looked good, and couldn't do it. So who knows, if it's ready to do tomorrow, what the story is there. But, I'd be light on your feet. Finally, the TLTs, which was a head scratcher today also, gave you your first red engulfing bar, where it traded above a prior high, and then back below this spot right here. So that could have got you out, from where it was here to this engulfing bar sell signal. I would at least have sold your longs if you were in it. This might mean that they think the bank, stress tests are going to be good, and maybe the stock market continues, which means this can come in and at least, try and fill this gap. Most of these gaps get filled, but this bar right here, if I was long, would have had me sell it. And those who've been looking for this TBT buy, okay, here's your first engulfing bar in the low end of the range. So maybe, if the TLTs get downside follow through, the TBTs get some upside follow through, and that would be your next spot. JP Morgan, just to show you a bank, nice follow through today. Here was when it crossed this spot, giving you a buy signal, gapped up again, continued, and it looks as if, here will be a boatload of resistance. So, if you think the bank results are going to be great and they could have a dividend and do buybacks, which this is already announced, maybe you get a little bit more follow through. But I'd be lighter to the long side, and it's not telling you to be short yet, so that's a guess. Took back this moving average, and now here's your next spot. Bank of America, a lot of guys are trading on our floor. Congratulations, here's your move. It doesn't look like much, but percentage-wise, it was a nice one. Got to give Blang, a little bit of kudos. Some of you guys were trading it. You bought it yesterday into this, and you got yourself a nice gap up, and now you have a little bit of an island bottom here. So you'll see what comes out with the stress test. Here's your next resistance there. So in closing, I hate it when it seems like you have positions you come in with, and if someone would have, smacked you and knocked you down and dragged you in a corner, which would suck, and you didn't have the chance to sell your positions in the first hour like me, you would have made a lot more money, just all of a sudden waking up and someone give you some long salts. Oh, what'd the market do? Here it is. I had an awesome day. That's happened many times. Usually though, with your discipline and with the probabilities, you could manage your positions better than when, you're too cautious based on what the market's doing. But, I think so. I think over time, it's better not to be stolen on the way to work than the scenario I just mentioned before, which it's not pretty. But so here we are. Tomorrow's the last day of the month. Today could have been window dressing. Who knows? Tomorrow they pull the skirts down. We'll see what happens. I did not go out short, but I'm also not long. If we gap up tomorrow, I'll probably look to fade it one more time since we came too far too fast and it's a little bit higher level. If we sell down tomorrow, I'll wait and see. Can we test today's gap tomorrow and does it hold or not? And look for some strong stocks from today to see if they hold in there. So I'm going to be more tactical. Tried to catch a nice day and a half swing trade, which worked from yesterday into today, but could have been a lot better, but it could always be better, but it could always be worse. I'll see you tomorrow.